Welcome to Lunch with Legacy Leaders, a weekly talk show with local and national thought leaders on issues impacting the Black community. Now introducing our host, Ms. Anne Marie Sorrell.
Good afternoon and welcome to another episode of Lunch with Legacy Leaders. Thank you so much for taking time out of your afternoon to join us. Before we get started with our broadcast, I'd like to first thank our sponsors, Broward Health, AARP, the Florida Lottery, and the African American Black Alzheimer's Disease Initiative at the John P. Hussman Institute for Human Genomics, University of Miami, Miller School of Medicine. If you or someone you know is experiencing loss of memory or memory problems, please contact their research team for more information at 877-686-6444. Now, as you guys know, we're in the middle of tax season, and that's business taxes, personal taxes, and so much more, as well as so many other things that are happening. We just had another stimulus come out. So with us in the studio today, we have a very special guest, Mr. Anthony Tony Brunson, who's the CEO of Anthony Brunson P.O. Welcome, Anthony.
Thanks for having me.
Thank you for being here. How are you today?
I am incredibly blessed.
Awesome. So before I dive into our conversation, I want to formally introduce our audience to you just by going over your bio really briefly. Anthony is the CEO of Anthony Brunson PA, a Florida-based public accounting and consulting firm. The consummate professional, Tony is a graduate of Jackson State University with a Bachelor of Science degree in accounting. He also attended Dartmouth College, where he completed his fellowship in the Small Business Enterprise Program. Tony's professional history encompasses over 3 decades of public accounting and consulting experience, a former partner of an internally grown accounting practice from its inception to becoming one of the top 25 Florida-based professional firms. Tony began his career as a staff member of a Big Four accounting firm and served as a manager at Pricewaterhouse, where he managed audits in the banking, oil and gas, construction, and governmental industries. Anthony Tony Brunson has been appointed by the Florida courts as a receiver and/or trustee as a result of various bankruptcy proceedings and guardianship matters. Additionally, he has gained extensive experience performing economic impact studies and providing economic development consulting services to developers, governments, and community development organizations throughout South Florida. Tony serves on and have served on several national and local boards of directors, a native Miamian. Tony is committed to civic involvement and has received numerous awards and accolades, including the Claude Pepper Award in the volunteer category presented by United Home Care Services, the Award of Excellence from the Louis Bing Scholarship Fund, Incorporated, and the Greater Miami Chamber of Commerce's Up and Commerce Business Award, among others. Moreover, his community involvement has included the playful role of serving as Santa for underprivileged children, to advocating for serious causes such as domestic violence programs, to enhancing the quality of life for the elderly, as well as contributing to programs that positively impact the lives of youth. So thank you again for joining us, Tony. I know it's always kind of weird hearing your own bio, right?
Yeah, it's a mouthful.
So, in your own words, like, how did you journey to becoming one of the top 25 Florida-based public accounting and consulting firms?
Wow. I would summarize it by sharing probably 3 words: perseverance. It's been rewarding, and the economic impact. When I speak in terms of perseverance, obviously there are obstacles in growing any organization. So, you just have to persevere has always been my thing. You go around it, under it, sideways, whatever you need to do to accomplish your plan. When I talk about the rewarding, obviously it's very rewarding for me to see that plan come together. And from an economic standpoint, there as a result of our practice, there are currently, my last count was 11 actual CPA firms or accounting firms that are practicing in the South Florida community. Some of those firms have become competitors, but that's okay too. Just again, the rewarding side of that is that's why, I came out from the national firms that practice locally, was to create an environment for firms that look like us, that were professional environments, an environment where people can thrive and achieve. And again, they're the standard CFOs, chief financial officers that have come out, controllers, and the accounting firms I just mentioned.
Awesome, awesome. Now, for those who, and there are some people who may not understand the difference between like hiring an accountant that's not a CPA versus hiring a CPA, which is a certified public accountant. So can you kind of like just kind of share briefly the similarities versus the difference between the two?
Well, most CPAs began as accountants with accounting degrees. It's just when we talk about a CPA, it's a higher level of standard. We're regulated. If the general accountants generally are not. So it's just a standard that's there. But you'll always hear me say the best teacher is experience. So whether that's an experienced accountant or certainly an experienced CPA, you just want to have someone that have your interests at heart and the capacity to serve you.
Absolutely. Now, we know this last year has been crazy. And I can imagine that accountants and CPAs I don't know if you had a negative impact or more of a help me out. I need PPP and every business calling you to get their stuff in order impact. How has this last year impacted your business?
Well, our business, I think other CPAs have been impacted as others have, in the sense of, it's impacted families and team members. We've all become more adapted Zoom calls, and I chuckle because I'm the real dinosaur in many of this. So we reach out to our young people to assist in conferencing natures like this. But from an operations standpoint, it's been good for CPAs. I mean, it has increased the need for the space we work in. The small and mid-sized businesses has created a ton of opportunities in terms of their needs to to pursue PPP funding, as well as other needs. Is just managing assistance in managing their business to get through this epidemic.
Absolutely. So with that, on that same note, one of the biggest challenges for businesses, whether we're in a pandemic or not, particularly small businesses, is having their back office and finances in order. And as a result, when they don't have that in order, they're not ready to respond to funding opportunities such as PPP or, SBA loans, or even some of the grants that came out this year, because they all require you to submit, your financials, your taxes, and all those different things. And even when we look at from a long-term perspective, government contracting opportunities, the ability to contract with large corporations who sometimes require audited financial statements and things like that. What advice and how does your organization and other organizations such as yours assist? So how do you assist businesses that need to get that together? And then what advice do you have for them before we dive into some of the tax laws and changes? But what advice do you have for them just in getting that done and in order and keeping it that way so they're ready to respond?
I think the primary advice is to invest. You need to think of it as an investment in your infrastructure, accounting being one of the primary components of that. Oftentimes, businesses, whether they're construction businesses, I do believe it's beneficial for them to focus on what they're good at. If you're a physician, it should be serving patients, your care, your practice. Construction folks, whether it's plumbing, electrical, that's where their strengths are. At our firm, we have a group known as, we describe as entrepreneurial services, where it's an outsourced CFO for analogy. Obviously, many and most small businesses cannot afford a full-time CPO at the level that they may require. So, we work to outsource that practice or that function, where we take on all of the accounting responsibilities to make sure their books and records are done timely, properly. And two primary roles or roles of success. I say, if we aren't helping their business grow, then we are no value to them. So our job is to help their business grow, one, or work ourselves out of a job. So as they bring in the kind of skill sets they need as a result of their growth, to have that accountant more full-time in-house, a full-time in-house person, and the skill sets to help them do what they need to do on a day-to-day basis.
Absolutely. Now let's dive into some of the tax laws, both business and individual tax laws that changed in 2020. Now I know they're both very different, and I think people who filed their taxes on the individual side may have gotten less of a return because they got more back in their paychecks because of the changes and things like that. So let's talk about, first on the business side, what are some of the tax law changes that happened, and how do businesses adjust with this? And then we'll dive into the personal individual taxes.
Okay, well, I brought a few notes. If we think about the tax code, it began in 1955, just to give some perspective, the entire tax code was 409,000 words. Today, it's over 7.7 million words, 60,000 pages, with specifically 7,000 pages specific to the tax code. That other 60,000 pages relate to the laws and things interpreting those 7,000 pages.
Wow.
But you mentioned the PPP. Obviously, for businesses, that's one of the primary issues. So the PPP loans are not income. They are not taxable. Unfortunately, I see some practitioners out there including them in income. So if you are a business owner, just be sure that they are excluding those sums of money you receive from PPP as non-taxable items. Some of the other changes are more traditional items. I mean, one of the biggest deductions beyond the standard revenue and expense deductions that I see many small businesses overlook or neglect to plan for are your SEP deductions. You can create self-employment plans similar to 401k. If you are matching your money in your business or putting sums aside, that's limited to around $13,000. We work with small businesses in creating self-retirement plans. And with those plans, you can put away as much as $57,000 today. It used to be 50. So it creeps each year, gets a little bit more as time goes on. Other than that, I think from a business standpoint, those are the primary impacts and changes that exist at this time. But for those of you that are out there that are not taking advantage of your self-retirement plans, we strongly encourage you to do so.
Okay. So I'm sure other businesses want to know, how did Donald Trump only pay $750 in taxes? Are there tax loopholes that, small businesses often do not know about, or are there other types of um, systems that need to be in place within your business, such as are there trusts, or how does that even happen?
Well, again, it all goes to proper tax plan. You mentioned Donald Trump. He's in the real estate function, primary real estate business, as many know. And in the real estate business, you get all lots of deductions from owning real estate, depreciation being one of the primary deductions. So with proper tax planning, you can certainly take advantage on the real estate side of minimizing. We don't call it avoiding tax, minimizing your tax liability. In fact, we have few real estate clients as well that do very well that pay no taxes. And again, it's directly related to some of the benefits throughout that industry. Other thoughts for small business. If you have family members that you can hire in your business. So in lieu of just providing funds to them, especially if they're sons or daughters, why not hire them in the business, and as they earn their income, or those incomes become fully tax deductible. So in lieu of giving them, stipends and not getting any benefit of that, you can certainly hire them in the business full or part-time and put them on the payroll. And those type of activities become tax deductible as well. I mean, all depending on the nature of the business and the type of business, there are a number of things that can individually done. It's just really sitting down with your professional accountant and creating a good tax plan.
Absolutely. Now, for individuals who file taxes each year, what are some changes that they may have seen, and then what can they be prepared for? Just, whether it's from the stimulus, because there's, some understanding that at some point that may have to be paid back somehow. So can you provide some clarity on just the different changes for individual taxpayers?
Well, if you satisfy the stimulus laws, took the funds out in connection with payroll and the other items that they allow you to forgive the loan, again, there is no tax liability. I guess this year, as a result of stimulus, the tax deadline has been moved from April 15th to May 17th. So we have a little more time to get those taxes filed. Another thing to think about is, oftentimes the IRS or the U.S. Treasury gives you a standard deduction. And I don't know, we talk a lot about this with clients. If you're single, you already get like $12,000 in deductions from the IRS. These numbers have increased each year. If you're married, filing single, 24,000 standard deductions. Now, what that means is to itemize your deductions, you would need to be above those 12,000 or 24,000 if you're married limits. Oftentimes people get confused. They'll just bring, well, I gave this much to the church and, this much for healthcare, and these are my houses. But if it doesn't exceed that $12,000 benchmark, as mentioned, the IRS automatically gives you $12,000 in deduction. So you have to exceed that. One of the new things this year is charitable deductions. The IRS is automatically giving you $300, not $3,000, $300 as a charitable deduction. But historically, you would have needed to itemize to take advantage of that. Other things surround earned income tax credits, for families that make $50,000 or head of households, single, and head of households generally, if you make $50,000 or less, those earned income tax credit have gone from $2,000 to $3,000, generally speaking. You have child credits that have gone from $2,000 to $3,000. There have been changes in the educational tax credits. So for all of you that are still in school, I think they're giving you, as a result of COVID, bigger benefits with your educational tax credits. You can deduct $4,000 of these expenses now above the line. So there's just a number of items that are occurring. So again, it's wise to have in my view, as biased as I may be, a professional tax preparer assist you with the returns. So you take advantage of as much as you can of all the benefits that are available to you, which will far exceed, in my view, any potential costs associated with the preparation of those returns.
Awesome. Is there anything else tax related that one should be prepared for this season if they haven't already filed their taxes?
I think that provides the highlights. Each individual taxpayer case is different and differs. So to really address other matters, it's just knowing your client, knowing who they are, and potential needs that they may have. So again, it gets back to having that professional taxpayer meet a professional that goes through their individual situations to take full advantage of the tax codes.
Okay, awesome. Now, you've done work in some other areas, including bankruptcy, guardianship matters. You were appointed by the Florida courts as a receiver and trustee. Tell us more about that experience.
Being an accountant, again, we talked about being a CPA, you're held to certain standards. So as a result of those standards, we've been fortunate enough to benefit from some of the other work we do on the consulting side of our practice, which are things like economic impact studies. We do some forensic auditing. When you think of a CPA, everyone says tax. But I can assure you, half the CPAs have have common knowledge, but certainly aren't experts when it comes to tax. So as a result of some of the other work we do, the courts have reached out to us. So we try to make ourselves visible to the courts, reach out to us to assist them, whether it's guardianships, where we manage the monies of minors. If they lose parents and don't have adult supervision, the courts would reach out to someone like a CPA or an attorney to manage the funds of those minors until they reach a certain age. If it's bankruptcy, of course, we manage the funds of an organization that's going through bankruptcy with the proper oversight to evaluate how monies are spent and try to bring them back to business or reorganize them in a fashion where they can go forward in a business and profitably. Having entered in bankruptcy, it's oftentimes it may be external factors, just change in economics, change in technology that drives them out of business. But oftentimes, and most times, it's usually the mismanagement of their resources. So again, that's where courts reach out to someone like myself to assist organizations.
Definitely. Speaking in terms of economics, right now, especially in Florida, the real estate market is out of control. So that's one side of the coin where we know we have investors and folks coming from out of town and just really driving our real estate market batty right now. But which also kind of impedes on our existing issue we had with affordable housing and everything like that. However, we also know that at some point, the moratorium on mortgages and things like that is going to come to an end. So do you have any type of, based on your experience with bankruptcies and, just economic development, do you have any insight on what you think? Because I don't think anybody predicted what we're experiencing in Florida's real estate market, but do you have any insight on what may be to come in the next 12 to 18 months or so, as relates to our economy and especially with the new administration and what they're, trying to do?
Well, I'd love to because we would certainly take advantage of it. But the basic theories are supply and demand. It really doesn't change. And what we're seeing happening in Florida is many of Northeasterners are coming into our state. And if you think about places at New York or Boston, they will pay several $1 million for a 2,500 square foot apartment or condo, or and as you in the Northeast, most of the living facilities are vertical, right? They're condos and flats and things of that nature. So as they visit Florida, you could take that same $2 million and get twice the space. Plus, nice yards or what have you, or certainly much bigger condos. And that's what's driving the price up with when we speak real estate specifically, where the Northeasterners are coming down and their money goes much farther than they would in the Northeast. It also goes further because they don't have to pay state taxes, local taxes, garbage taxes. Florida is a tax-free state. So those two are factors that attract many folks to Florida. I don't see it changing, certainly not in the short term. In fact, I could see that likely growing, just as they share with their friends the value they get with their dollars. And not only do they get more from housing, but they get less taxation on the earnings that they do receive as a Florida residents. We talk about Biden and the administration that there's now. Just be careful with that, because our administration, remember, there's a state administration and then there's the national one. Our administration under the governor has kind of an opposite view of Republican or Democrat, it doesn't matter. It's policy. And if you're looking at the policy things that you see them doing right now, it's trying to continue to cut taxes for many of the corporations that fund their coffers. Just yesterday, a bill was proposed at the state level that eliminates a Sadowski fund. If you're familiar with Sadowski, that's a fund that assists working people get housing.
Yeah.
They are taking all of that money out of housing and redirecting it to water, economic impacts, and other things. And historically, they've just chipped away at a trust fund that was supposedly specifically created to assist low and moderate home ownership for housing. So whatever is left in that fund will likely be half, at least 50% less of what it has been historically. And getting back to Biden and the national administration, obviously their thing is job creations, and they're surely putting out the money, they're putting out the bills that will assist with that. And those type of activities, in theory, assist the more, middle class, by creating more jobs and creating more opportunities with the job creation that goes along with it. So again, as this money comes out, the traditional thinking is that inflation is going to kick in, but we'll see.
When we talk about Black economics, what should Black folks be doing right now in this particular climate, with both, like you said, with our state administration versus our federal? what are the things that we can do to prepare to, or to be able to take advantage of the positive sides of what's happening within the economy and within rebuilding the economy?
Okay, well, me personally, I'm very optimistic about Black economics. Certainly, as these our new generations come and take hold, in terms that they're more entrepreneurial, they are more cognizant of their finances, and it's just different in the sense that when you look to my generation, generally, we just weren't taught. We just weren't given the opportunities that I believe our current generations have. So you say, what should we be doing? I don't think we should be doing anything other than what majority communities should be doing. And that's really setting up, watching our finances, creating plans from investing, seeing how our dollars are spent. And certainly my pet peeve is always spending dollars that support organizations of brown and Black folks. I never seem to get it why we will take our money and spend it in places that are not supportive of of minority communities. So I don't see it being differently. I just see it being more cognizant of the issues that are impacting us. Getting a financial planner, tax planners, or others to really take advantage of the opportunities that are going to flow down, whether it's in technology space. You hear a lot more about gold and silver and cryptocurrencies and all of these non-traditional investment opportunities that become available to our community. But at the end, it's really just spending our dollars with folks that are supportive of communities, of minority communities.
Absolutely. Thank you. So we're winding down on time. Is there a golden nugget or a takeaway that you'd like to share with our audience, in addition to what you've already dropped on us today, which is amazing?
Well, I just really believe that people should, invest in themselves first. And if you come from my school of thought, have heard me have this conversation. I mean, we have resources, whether it's light bill, phone bill, mortgage, car. You'll hear Tony say, take the first 10% and invest. Pay yourself first, and then worry about all of those things later. Otherwise, you'll just never catch up, never create resources. Just like there are challenges with all the things we just mentioned, kind of making ends meet. Invest in yourself first. Just period. And there's challenges are going to be there anyway. And beyond that is invest in getting to know your bankers, getting to know a lawyer and an accountant or CPA to assist you in growing whatever nest egg you can create. It is well worth the while. It's never too late, and certainly never too early to start putting funds aside that assist with your financial future.
Absolutely. Well, thank you so much for all of your advice today. This has been very, very helpful. I think, we could probably talk for another 30 minutes to an hour, but I know we all have to get back to our days. So we want to thank you for definitely sharing this time with us today, Tony. Appreciate your advice and all that you do. Stay with me for a moment as I'm going to just do some quick announcements.
Sure. Thank you.
No problem. Thank you again to our sponsors, Broward Health, AARP, and the Florida Lottery, and the African Black Alzheimer's Disease Initiative at the John P. Hussman Institute for Human Genomics, University of Miami Miller School of Medicine. Our next issue, The Most Powerful and Influential Black Business Leaders 2021, will be released on April 18th. So please mark your calendar and pick up your copy in the Miami Herald and the Sun Sentinel. Next week's guest is Mayor Dan Gelber, from the city of Miami Beach. It's going to be a very interesting discussion. As you guys know, we have quite a bit going on with some of the recent events in Miami Beach. Please remember to tune in to our show, Sold, hosted by none other than Miss Nikki Jellin, every Wednesday evening at 7 p.m. as we disseminate intellectual entertainment on fashion, arts and culture, relationships, mental health, and food in South Florida. Please share this video and mark your calendar and tune in with us next Thursday at noon. Thank you, everyone, and thank you, Tony.
Thank you.